Good afternoon, everyone. Today's Friday, the 10th of February, 2012. This is Brian Shannon from Alphatrends speaking. Let's take a look at this market here. Let's take a look at the numbers first. The S&P 500 for the week finished down 0.13%. NASDAQ was higher, and we'll see why in a moment. Obviously, probably due to Apple for the large part of that gain. But the Russell got hit the hardest, down 2%, and broke a important level today at 82 that we'll talk about. So, in the financials are teetering or at an important level as well. So let's take a look at the action here on the charts. The S&P 500 has continued, as we know, to march beyond basically every prior level of resistance, and it came up to the highs from last July and yesterday, that is, and that's where we seem to be backing off for now. There's really no damage done to this trend on the S&P 500. You can see here that this is a trend line that we've been observing that basically represents the essence of trend, and that comes in at about 133 or so. More importantly, though, we did hold above the lows for the week, and that's where we were basically right on the open, which was right near the lows for the week. We are now below that 5-day moving average, and we're going to have to see it get back, I think, above 134.70 or so before we can consider that it's neutral to advancing again. This is just giving us right now a short-term reason for concern. We broke this trend line and the 5-day moving average. Obviously, we back it up just to a 65-minute time frame, and we can still see we're in a great uptrend there. And of course, on the daily time frame, we have this bigger trend line that would come in down near that 50-day moving average, and the 50-day moving average is located right now at about 128 and a quarter. So it looks to me like it's time to put the light back to yellow or caution here, and think that we're going to at least correct a little bit more through time, if not get a deeper price pullback. If we were to see a deeper price pullback, I think that this trend line is an important level that we want to observe early next week, near about 133 and a dime. And then I think the 20-day moving average, which comes in at about 132, would be an important level. So we've got a couple levels below us that look important. That trend line is also resistance from late last month. So 133.10, if that fails to hold, then 132, and we'll take it from there. Otherwise, it's neutral, I would say, in the short to intermediate term, but longer term, still bullish. The NASDAQ was down 44 cents today. Again, for the week, it was up. A lot of that had to do with the weighting of Apple in there, and Apple has just run away here, looking like it wants to make a stab at 500. But the Nasdaq was down 44 pennies today. If we take a look at the 10-minute time frame in there, we still held significantly above the lows for the week at about 61.70. That's going to be an important level early next week, and we have this trend line as well that comes in at about that same level. So 61.70-ish. I wouldn't be surprised to see the market get down towards that level. We've had a great run beyond these highs here for the last 3 weeks. That is 3 weeks we've been above those highs. Obviously, we've been higher each week this year, and on the monthly chart, we're still kind of looking at that 65 level as a potential area that this market is running towards. But still, just a real nice, healthy uptrend in the Nasdaq. Seems like it's due for at least a pause, but there's still great action in the individual names. And the Russell 2000, as I had mentioned, was the one that broke a little bit more violently below some important support, and that's at $82 a share. Now, when we back it up, excuse me, to this 65-minute time frame, you can see we have that similar trend line, which is now down at about $80 a share, and that was a little bit of prior resistance and approximately the 20-day moving average as well. So to see the Russell 2000 settle in down towards 80 would not be a surprise at all, and we've still got a very healthy uptrend on the daily chart. We can take a look at it from this level is where we get that $80 area, and then off of the October lows, it's much further down, closer to that 75, 76 level. But the Russell 2000, it looks like near term guilty till proven innocent. That is, unless we can get back above and hold above $82 a share, you want to tread cautiously with the Russell 2000. Semiconductors were down 62 cents, and this was a level that keeps showing up on my chart for some reason, but 30 34 is a level that we were looking at earlier in the week, and it held throughout the week as support. So that's going to be important to see hold this week coming up. That is next week. And below that, we have $33.50 a share, and then just at about 33 and a dime that is where our potential support is. We did break this longer term uptrend. Again, breaking an uptrend line doesn't assure that we're going to go lower. It says that the rate of ascent has slowed, and we're at least due for a time consolidation. And 34 to 34.20 seems like a level to hold up for now. And if that drops, of course, then down towards 33.30. But when that trend line breaks and we are below a 5-day moving average, which is declining like we see now, we're going to want to see the semiconductors get back above and hold above 34.50 until we can look at it as near term bullish. Now, a lot of people write comments and say, "Oh, you're an idiot. You're getting short. You're calling it bearish or whatever." I'm not calling it bearish. I'm calling it short term. You have to remember that we're looking at multiple time frames here. What we have is a longer term uptrend, and now we're exercising some caution as the market is telling us that we're holding below that 5-day moving average, and the 5-day moving average is declining. So, just try to remember there's everyone has different goals and time frames that they're looking at in the market. Just focus on the ones that make the most sense to you. If you're still a longer term player, you want to focus on those longer term movements in the market. And 1460 in these financials was a level that we were talking about throughout the week, and the market's been battling with that level. It's you can't say, well, it failed there and that was resistance. We're showing that there is a battleground here that is important to look at. It's kind of like I had mentioned in Ren today. Ren, I'd posted this on the blog and said that this is the volume weighted average price since the event. The event was the big movement when Facebook filed for the IPO 2 weeks ago today, or rumors were that they were going to do that. Anyways, the volume weighted average price since that event has been heavily defended by the sellers, and it seems like it keeps wanting to get up through there. And just because it breaks it for a moment doesn't mean it's going to hold. What we want to see is these levels, that it breaks out and then it holds up in there, or we get a pullback and then makes a higher low. That's not happening in Ren, and I didn't mean to get off topic on a little stock like that. But the financial stocks are still here also in a great uptrend. If we take a look at the trend line that represents the essence of trend, that's why we're not taking it off these lows, because it kind of has been dissected or intersected many times. 1460 is what we spoke about. We have the highs from about a week and a half ago at 1440, and that's where we have that trend line as well. So 1440 is something we're going to want to keep an eye on, and we want to remember that here we have in order for this market to be back to the short to intermediate term bullish, I think we're going to want to see it get above and hold above $14.70. Otherwise, you have to treat it as a little bit more cautious in here for now, and that's the way I think we ought to look at it for the week ahead. Have a good weekend, and I'll talk to you next week. Thank you.